Hello and welcome to NDTV Profit. You're watching IPO Adda, and we have a listing today of TBO Tech. The company is listed at a premium to the IPO price of 920 rupees per share. We have joining us Ankush Nijavan, who is a co-founder and joint MD of the company, and Gaurav Bhatnagar, who is also the co-founder and joint MD of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Congratulations on the listing. My first question to you, now that you have listed, give us a sense of how the full year has been for you, because your financials were only limited to December at the time of IPO.
So, thank you, Sanjeet, for your compliments. It is a momentous occasion for us as a company. Our journey of 18 years has finally culminated at an important milestone of listing on the stock exchanges. The full year has been pretty much in line with as we were expecting it to be based on 9-month numbers. Obviously, we will be sharing our numbers shortly in our next board meeting, and we'll be able to give you more color then.
Is it fair to say that the annualized rate of growth that you've been seeing, you've been able to achieve that both on profit and top line?
Yes, absolutely. And we'll be obviously, as Gaurav said, we'll be obviously mentioning this in our next financial release.
Give me a sense of how, I know you can't talk about the numbers, but give me a sense of how travel has been in the fourth quarter. And now that we are in almost middle of the first quarter of the next financial year, how are you seeing the last 5 months in terms of growth and orders?
So I think in terms of the first Q4 of last FY, I think travel had a lot of momentum. As we always say, the young want to travel, the rich want to travel. So I think travel today is becoming a lifestyle, and be it any income group. So we saw a very nice Q4, and I think, and obviously Q1 is for this financial year is typically the summer season in most of the geographies we operate. So we obviously see it that it will have great momentum and demand, in both for outbound as well as within India as well.
The focus has been also on the hotel side as compared to airlines, because hotels contribution of hotels is growing for you. How has it been the margins or commissions coming in from that side? Have you seen good traction from the hotel side for domestic and global?
Yeah, absolutely. Hotel demand is very correlated with airline supply and airline demand as well. And as we've been seeing, the load factors have been high, not just in India, but globally, which correspondingly leads to higher hotel demand. So we've seen similar movement in our business as well. So no real surprises over there. The momentum remains, the tailwinds for travel continue to grow.
Can you also give us a sense of the kind of travel which is there for European market as well? Are you seeing a good demand coming in there? Because we saw last year was a muted one, but we've seeing some sense of or some signs of demand coming up for travel in that for that zone.
So, Sanjeet, Europe historically, traditionally has been the largest destination in the world. It is the most aspirational, both for the first-time travelers as well as a destination that people go to even as very sophisticated travelers who may have seen Europe before. And that continues to play out in Europe. Yes, historically there have been some issues around visas, delays in visas, etc., which I think is getting better this year. And that should boost more demand. But overall, we continue to see very strong demand for Europe over the summer.
Ankush, can you give us a sense of, you can't talk much about the performance of Q4, but margins, you've been able to expand your margins in the last couple of years. It's close to now 19%. Is the demand situation good enough to expand the margin from here on to maybe a 20-21% level? Do you have enough levers for that?
So I think So our intention would be to maintain the same margins. The reason why, because we believe that the expansion, EBITDA expansion will come from the operating leverages, which we have demonstrated in our last 2 years of financials. I think we want to leave money on the table because the travel agent and tour operators are very important part of us. So if they make more money, they will obviously increase more business with us, both in India as well as overseas. So our theory of EBITDA expansion will come from the operating leverages, but not increasing our current margins, what we have done in the last financial year.
Is there a timeline for that operating leverage to play out? Because you're spending nearly 135 crores on technology and data solutions from your IPO proceeds. So is there a timeline when you see this kick in, the leverage kicking in and giving you that heft in terms of margins and profitability?
So, Sanjeev, you have to look at it from a perspective that we are a profitable but also a high-growth business historically. And the choice that the company has to make every year is that what portion of the operating leverage, the cash generated from the operating leverage, must be reinvested into the business in the same financial year. And hence, while our belief is that operating leverage will continue to grow every year, it is also quite possible that depending on the growth opportunities in front of us, we may choose to reinvest that operating leverage into the business. But these are decisions that we take, for every year and every quarter basis the opportunities that come in front of us. So fundamentally, operating leverage will continue to grow in our business. We have demonstrated that in the past. The EBITDA margins have been constantly expanding. But we also are very mindful of the fact that the growth opportunity in the future is immense. We operate in a $2 trillion market. And we are somewhere between $3 and $4 billion only in that $2 trillion market. So the headroom for growth is so far high that we would not compromise on growth just to maximize margins.
Also, if you can give us a sense of the scalability of your Dubai business, because you're spending nearly 100 crores for the DMCC unit, which is Tech Travels DMCC, and you're trying to make it a hub or increase your participation from there. How is there? Can you give us a game plan of how you want to do that there?
So Tech Travels DMCC is a step-down subsidiary of TBO Tech, and this is the subsidiary that operates our entire global business. This company based in Dubai has its own leadership team sitting over there, and they drive our global expansion. And hence, investment into this entity is very important for us. Two of the big pillars of the business are global buyer growth. So everything that we do outside of India, that investment has to happen through this company, and hence this investment is quite critical. And similarly, on the supply side, we do our global supply contracting from Dubai. And hence, there is further investment going into it. So absolutely, this will remain a key growth driver for us in the future as well.
Ankush, you had identified 40 crores to be used for some of the inorganic acquisitions. Can you give us an understanding of which are the areas where you will be looking for acquisitions?
So, for us, I think to put a particular geography won't be fair because there are opportunities which come to us across the world. But to answer your question, I think Europe and US will obviously be a focus for us. But as we said, we are open to any meaningful company which might fit the TBO's culture and technology, and what is our theme of adding more buyers and suppliers within India as well as overseas.
Gentlemen, I know it's a big day for you. Congratulations on your listing. We hope to speak to you once your earnings are out and talk in detail then. Thank you very much for joining us on NDTV Profit.
Thank you so much.